Good morning, everybody. Happy Monday. Back to a 5-session trading week after last week. Obviously, broken up on Thursday with the Juneteenth holiday. Then on Friday, we had, kind of one of those things where, people, it's summer, right? And so you give people a Thursday off on the markets. They're not going to be around on Friday. So a lot of people I spoke with were out of the office, and quite frankly, are skipping in and out of the office here for the next month and a half or so. So keep that in mind. We'll get started here in just a minute. Obviously, a lot to talk about. I've got a few things here I'd like to go through this morning as we're all kind of waiting for what's next. Quite frankly, is really kind of, I think, the best way to describe it. So we'll get to this here in just a second. We'll get started in about another minute. I'll give people another minute or so to log in here this Monday morning. People tend to be a bit slower on Monday morning, which I, of course, understand. So we'll do that, and we'll get started here in just maybe 30 seconds or so. I'll be right back. There's a pretty good storm coming through here, so if it gets loud, thunder and stuff, I'll have to close the windows, but we'll see. We'll see how it goes. All right, good stuff. Again, good morning, everybody, and happy Monday. It's June 23rd. We're very quickly approaching the end of June, heading into July. Obviously, markets tend to be a little bit more lackadaisical. It kind of goes with the weather, at least here in the northern hemisphere. I realize we've got clients around the world, northern and southern hemisphere. But here in the northern hemisphere, it's hot and humid depending on where you are, or at least hot, right? Humidity is a second question. And so markets are a little bit slower. People take vacations. But obviously, we've got a lot to talk about this morning. So if you're here for the first time, Serge Berger here from thesteadytrader.com. This is our morning call. We're going to spend the next 15 minutes or so together going through what are some of the top things on my notepad this morning. Some of the things we'll touch on is I want to look at the U.S. dollar, which we think is increasingly at a point where it could start to move higher. And that is something that we've now been talking about for a few days. We started floating that idea first, I think, last Tuesday, Wednesday-ish. And it's increasingly looking like that might come to fruition. And that has consequences across asset class. So we'll talk about the dollar. Then I've got some individual stocks, cybersecurity stocks, and others that I want to talk about. Novo Nordisk and a energy stock as well. So actually, let me close the window here. As I was just saying before, there's a pretty big storm coming through here, so I think it would be good. Cool. Okay, so let's get started. So first of all, just a quick reminder of where we are in the big picture on the equity front first, and then we'll move into dollar, cross-asset, and then individual stocks as well. So let's start off with the S&P 500. We'll look at the SPY ETF. This morning, we're up 20 basis points here in the futures market, and we'll see kind of where that goes. But I think we are just at a difficult level, and if you've been following our morning call for the past couple of months, you know that we've been reiterating that this is just a difficult spot to be in right here from a technical perspective. Again, a lot of people bought the S&P 500 basically after the election, and then we had this actually, sorry, one sec, it's loud as hell here. Jesus. Okay. So the S&P 500, again, it's just at a difficult level. And really, since we've been talking about this, and we've been talking about this difficult level coming into space since about early May, so a little bit too early. That was now about 5% to go in the S&P. But we're now smack dab in the middle of this resistance area. So it's just a difficult level, I think. Pressing longs, pressing shorts here just makes it more difficult. So you have to go look underneath the surface for sort of next rotational moves. And I believe there is a sector rotation proof enough, and we've been talking to clients about this for the past few weeks, into parts of the market that we believe are dramatically underweight and make a lot of sense here to be in. So let's talk about that first. The energy sector is really the epitome of that. And, you guys have probably all heard me talk about the energy sector being on the long-term chart, just absolutely coiling up. There's a bit of a structural issue in terms of, ExxonMobil and Chevron being large weights of this ETF. But ultimately, if we start to see reshufflings of portfolios into energy stocks, the energy sector should have a big leap. Now, I'll give you one individual stock. It's Occidental Petroleum. Excuse me, let me show you that in the daily chart is what I meant to do. I'd encourage everyone to put this one on your radar. If you are using the Trender momentum indicator, you will notice that we did receive a fresh momentum buy signal a number of days ago, and we have currently a trailing stop on that. So we received a buy signal. So far, Occidental is up about, call that 6.8% to be precise. We've got a trailing stop in place. The free profit target has already been, reached on this stock, I believe. It should have been reached. Where is that thing? Oh, I see, because we got it very quickly. Okay, so this is a stock that we can trail to the upside. We have a trailing stop currently, Occidental Petroleum, around $43, $44, $43.50, $44, and it fits into the longer bullish narrative, which is kind of this chart here. So again, you can be technical about it, or you can just kind of use a bit more advanced math, like the Trender, which will tell you that this is an important level here. We already have a momentum move. I would suspect ultimately the stock breaks higher. Warren Buffett, obviously a big famous holder of this stock, and our Trender indicator reminds us to be long the stock here at this point. So that's idea number one here, freebie to start off the Monday morning. I should also mention, speaking of Monday morning, it is a Monday morning after an options expiration. A huge one on Friday, so I would expect this morning's trading to be just weird. We obviously had the news over the weekend with the bombing of Iran's nuclear facilities, and I think a lot of people are a little bit surprised to see the equity market up as much as basically up, not down. I will tell you, it's not that surprising considering that we live in the gambling bubble that I keep reiterating. There's very little memory out there of when things go bad. They can go really bad. So a lot of people just are no longer doing risk management. So I think that's a lot what explains the behavior here, and that ultimately can doesn't have to, but can really blow up the entire market, quite frankly. Again, it's not my forecast here to be super bearish, but I just think people should have a hedge on their portfolio. Not a recommendation, obviously. This is purely educational. We are working with clients to look at really putting in serious hedges in their portfolio where they have asymmetric risk. If that's something you're interested in, reach out to us and we can talk to you about that as well. More on a one-on-one basis, because that very much depends on the portfolio structure. So, we think there's a lot of reasons to be hedged with, basically tail hedges in place right now. It's not because we're bearish, it's just to be, just in case. And we think that makes a lot of sense here at this point. So that's another idea, Occidental Petroleum. And then we think some of the better spots in the market to be in, and I'll show you our Market Rover software for that, is the cybersecurity area. So what we've got here is Hack. This is the cybersecurity ETF. You can see that we remain in a bullish trend that started back in April. That space so far is up about 14%. We have a trailing stop in place, and on a single stock level, the F5 Networks company, FFIV is the ticker symbol, is at a really good spot here where it remains in a bullish trend. So the green background color is what you want to look at. And you can see so far this particular stock is up about 30% since then. It's still trailing here, so it's at a pretty critical spot. I've got the, somewhere around $295 to $300 area sort of circled, because if we can break back above there, then that would be an interesting spot to potentially get long from a momentum perspective as well. Okay, so that's something to keep in mind. So that's another idea. Then on the defense space, or in the defense space, you can look at something like Lockheed Martin. So that would be something like LMT is certainly a stock that we're watching very closely. We don't really have any signal here yet, but it's really interesting that the price of Lockheed Martin is basically not doing much relative to the actual space. Is it ITA, I believe? Yeah. So if you look at the ITA ETF, which is basically tracking aerospace and defense stocks, Lockheed Martin is very much lagging now. There's most likely a reason for that. I think, I've got levels around 485, 490. If we pierce above that, we'll probably get new momentum signals as well. And then the last sort of single stock idea this morning is just, again, what's going on in Novo Nordisk. So just as a reminder, if anyone that cares about this kind of stuff, this is one of the oldest sort of biopharmaceutical companies, whatever you want to call it. This particular company, it had its IPO back in 1981, and that's a lot of history here on this particular stock. So the stock this morning is down about 6 or 7%. On some news. You can go check out that news yourself. I still think there's a lot of reason to like this company. This is a 44-year-old support channel that you're looking at. Listen, by all means, maybe this support channel gets broken for the first time in 44 years. I'm betting that at some point down here there will be a bid coming into the stock. So that's not an immediate call to buy the stock. Again, only educational here, but it's something that we are watching very closely. So that's a lot of stuff here to start off the week. Again, mindful that we do have options expiration hangover here this morning, which again, it just means basically we had a big triple witching option expiration day on Friday, and so we want to be mindful of the potential choppiness this morning. Then everyone's kind of on edge. If I were to summarize, everyone's kind of on edge here, given the weekend events and what might be Iran's response. I don't know. Obviously, I don't have a crystal ball, but I do know that everyone's watching that, which is, why markets may be kind of neutral, because they just don't know. Like it might be a coin flip. I don't know. Lockheed Martin, FFIV, and HACK. So those are cybersecurity stocks and defense stocks. And then again, the U.S. dollar is probably the biggest thing that I'm watching is the dollar. I think if the dollar were to find a bid, that would be, I'm going to give you a daily chart on this. That to me would be pretty important to watch, because if the dollar gets a bid here, that probably has pretty important consequences for other risk assets as well. So we'll continue watching this. So that's it here, folks, this morning. Please make sure you subscribe to the channel because it allows you to be updated in real time when we go live with our analysis. Also, if you haven't done so yet, please give us a thumbs up like on the video. And we will see you guys back here tomorrow morning on Tuesday. If you are a member of our Trade Ops area, we will see you guys over there in a few minutes to kick off the trading week. Thanks so much. Hope it was helpful, and have a great start to the trading week. It should be an eventful one.